In today's video, I'm going to give you a detailed breakdown of the strategy used by Serghey Magala, the Gold Cup champion of Forex trading. Serghey is also the Futures champion and has won the title multiple times. I'm going to show why the only thing that matters in Forex trading is the strength of the currency index. On screen here you see the strength of each currency, and if we come to the charts you can see the British pound index, you can see the euro index, you can see the DXY, which is the US dollar index, and the JXY, Japanese yen, not paired with anything, just themselves. The strength of these is what moves the market. The strength of each index, not support, not resistance, not order blocks, and not fair value gaps. The currency strength index is the true mover of markets. In today's video, we are going to show the strategy used by Serghey Magala to win both the Futures and Forex World Championships. I will post a link to this website and you will see Serghey's name appears everywhere. You can see him again down here, and he's also got some second places and some third places using the strategy that I'm going to show you today. He had an impressive 149% return and 316% return, all independently verified. So what is Serghey's strategy? So I have made a full video on currency strength index, and I'm not going to go over in depth. This video today is more going to show you examples of trades playing out using Serghey's actual strategy, but just to skim the surface of the currency index. So you have the major currency pairs here: GBP, USD, Euro, Swiss franc, JPY, AUD and NZD. Now these are all the major currencies. They're called the majors. The major currencies, the major economies of the world. So these can never fluctuate too far away from each other. They need to come back in balance because these countries need to do trade together. So they need to rebalance, equilibrium, come back to the mean revert, you can call it whichever you like, but these, unlike stocks, can never shoot away up to the moon like Tesla, like Apple, like indices S&P or Nasdaq. The foreign exchange has to rebalance so all these countries can do business at a fair value. Now if we look at example the Euro USD, all the videos you see on support and resistance and order blocks and all this garbage, forget it, get it out your mind. They are just a byproduct of transactions taking place and mean really nothing. What happens when you're watching the Euro US dollar? What is driving the Euro and what is driving the US dollar is their indexes. So if you come here, you can see this is the British pound index, okay? Here, for example, this is the Euro index, okay? You'll all be familiar with DXY. This is the United States dollar index. And you've got the JXY and so on and so on and so on. But these are not paired with anything. This is telling you the strength in the movement of each actual index. Not paired, just solitary pound, euro, US dollar or JPY. Before I continue, I do apologise if you hear birds chirping in the background. I'm in the UK and it's a beautiful day here today, so I've got all my windows open and I can hear the little birds chirping outside, so I do apologise if the volume is not as it should be. So where were we? Indexes. Okay, so now we understand that every one of these major currencies, they actually have their own index. Okay, and it's that index that makes the market move. So, for example, you have the euro US dollar, okay? People will be looking at chart patterns, they'll be looking at order blocks, they'll be looking at the support and resistance, and they'll be setting up a technical analysis. When the reality is, euro can be moved by transactions happening, and these happen every minute of the day. Euro GBP, Euro JPY, CHF, AUD, NZD, and any other minor currency paired with euro. So as an example, JPY could be making a massive payment that could affect the euro index, yet there you are sitting waiting on going short on euro USD. JPY makes a big payment, it affects the euro, and it goes in the opposite direction. So I will make a full video on this. I just wanted to skim the surface that all of these individual major currencies have their own index, okay? And it's the strength of that index that moves the market, and the strength of that index is determined not by just one pair doing business. The euro US dollar is affected by the euro doing business with all these pairs and the US dollar doing business with all these pairs, and that in turn affects each index. So I hope that makes sense. So, currency index. This is what Serghey Magala trades. Currency strength index. Okay, let's look at this indicator here. Here we can see just a whole bunch of lines at the bottom here. So the only thing we want to focus on is this indicator at the bottom here, the currency strength index. Okay, the name of this is called FOTSI, and that is the name of Serghey Magala's strategy, Forex Overview True Strength Index. So this is telling you the strength of that particular currency index. If you look at US dollar, for example, well, let's see JPY. So we can see JPY here. It is the orange line here, and it's coming down, okay? So let's flick across to the Japanese yen index, and there you go, it is coming down. So this orange line is just a reflection of this index. So you can see JPY index is coming down, and if we go back to the currency that we were on here, you can see the orange line is in a downward trajectory. Okay, so this line is just representing the index, the strength of the index. Now, the beautiful thing about this indicator is it doesn't matter what pair you're on. You'd only need to stick with one pair and you can see exactly what's happening on all indexes. So for example, just now, no matter what pair I'm on, I know CAD, Swiss franc, US dollar, euro and New Zealand are all in this area here. So I know I don't even need to look at them for at least a couple of hours, okay? Because they're not going to set up. I'm on the hourly time frame, and these are all in here. It's going to take them at least 2 or 3 hours to get up to a zone where I would be interested. So this is where this is a beautiful indicator. No matter what pair you're on, you can still see the same index, okay? Now again, this only works for Forex. This is the only thing we're looking at, Forex, and we're trading the major pairs. Now I have been trading this since circa 2020, and I've got huge amounts of data on this, and there is some pairs, I think there was 4 pairs that I've dropped that just don't perform. Collecting 100 trades on one pair alone, and they don't perform, so I've dropped them from my watch list. Right, so let's talk about this strategy. What defines an entry and where would we take a position? Here we have the red line, okay? And at the bottom you have here a green line. Now for those of you that are familiar with RSI, most people watching this with a basic understanding of trading would have used or understand the RSI indicator, overbought and oversold. So think of that. When the Australian dollar is up above this red line here, now I'll come and show you the settings for this just now. So I've not changed any settings. So you can see here that we've got overbuy, oversell is 50. So this area here is 50 plus 50. This area here is minus 50. And this channel here, you can see that shaded area. So outside this shaded area is plus 25. If you look across here, you can actually see it here. So this is above plus 25 up to 50, as you can see here. And down here, anything above this line here is above 25. On the flip side, minus 50, and this here is minus 25, and anything below here is between minus 25 and minus 50. So what are we looking for? We are looking for a trade or a currency index to be here. Then we need to pair it with something. So we need to pair it with something that is below the minus 25. People, do not get mistaken. You do not need to be overbought and oversold. Okay? The only thing you need, once one is above this red line, you don't need to be below this green line. You just need to be in this channel here. This minus 25. So what would be valid just now would be JPY, Great British Pound. Before, back here, we had Euro as well, and we had CHF. So all we could pair with all of these here. Okay. So let's actually go to some real time examples. So if we come to Great British Pound CAD, Great British Pound Aussie Dollar. So what do we see? We see Aussie Dollar here has came above the red line, and we've paired it with the Great British Pound, because you can see that is here, and it is below the minus 25. If I just take this tool here, this area here, this is the minus 25. So if we look at this example here, we can see that the Great British Pound has come below this green line, meaning we're looking to buy. Okay, it is in this oversold area, and we've paired it here with the Australian dollar, which is above this plus 25. We've just drew this blue vertical line which goes right onto our charts, and as you can see here, we had a beautiful 7-to-1 trade. So you can see that lines up perfectly with the line, and you can see here, right, that's where the line starts. On the purple, Great British Pound was here in this oversold area, and the New Zealand was here, Australia was here, just overbought, just above the 25 area. So we draw this blue vertical line, it goes onto our charts. As you can see, we enter here, and our take profit is TP1 is at the EMA 50, which is this blue line, and TP2 is at EMA 100, which is this orange line. And it's important that you drag this up here at this stage, so you don't exit the trade. Okay, when, let's take another arrow, you don't exit the trade here when you hit this 50, or when you hit this here. You exit the trade, you actually mark up your chart. So where was EMA 50 and EMA 100 when I entered the trade? And as you can see, it reaches it. Okay, it reaches this area. So that's one example there. Let's see if we've got any other examples on this chart. We do not seem to have. So let's go to Euro AUD. So as we can see here on the FOTSI indicator, again we're oversold here, AUD, and Euro is this blue line here. And what you can actually do is you can wait until the line curves. There's a curvature that happens in the line. You can see here where we're coming right down, and you can see I've not drew this blue vertical line until I see this start to change direction. Okay, and it started to change direction there. Euro is still above the plus 25 area. So we draw our blue horizontal line. And again here, beautiful trade, 3-1. This trade played out the same day, almost. And it was a 3.57 to 1 trade. So let's go to another option here. So here we have Euro, New Zealand dollar, and we'll come to our currency strength index. We'll just grab our arrow, and we can see that New Zealand is outside the oversold. We can see here the Euro. We draw our blue horizontal line. We enter the trade, and your stop loss, guys, is just all on experience. There is no set stop loss. It's just all on experience. I've actually got notes written down, and I know each currency pair for me has got different stop losses. Some are tight and some are wide. So it just depends, and it's just data that you're going to collect and experience that you're going to gather when you're trading these. So here we can see we entered, and at the time the EMA 100 was down here, down in this zone here. So that's where we put our TP, and as you can see it got tapped as well. So this trade here we entered on the 7th at 7 in the morning, and we exited on the 10th. So it took 2 or 3 days for this trade to play out. This is maybe not a good strategy to use to try and pass a prop firm. Personally, if you've watched any of my other videos, I use scalping to pass prop firms. Now, admittedly, sometimes I'll blow 2 accounts and pass on the third. Sometimes I'll pass the first time, but I don't care if it takes me 2 or 3 times to pass the eval, because I'll pass it within maybe 2 weeks max, 3 weeks, an absolute max. And you know, too many people I speak to, they're in these evaluation stages for 3 months, and that makes absolutely no sense to me. I think you should just, I know that the top step combine costs what, $100, $150 a month. So you just pay it, just reset it until you pass. But make sure it doesn't take you months, because time is money. And if you're stuck there trading, it's like a demo sim account and you're not making any money. But when you do pass, when I pass my evals on scalping, I never ever trade real live accounts scalping. It's just too much. It's just, for me, I don't have the makeup, and it's not, my psychology's not set up for scalping long term. You know, the markets mess with your mind, and I don't want to be sitting there either every minute of the day bloody trading. I want to pass evals on scalping, and then once I pass the account, I then flip to this strategy that I'm showing you now. This is one that I use on FTMO, and I also do top step, and again I'll do scalping till I pass, and then my strategy for there, I flip it to an intraday. So scalping for me is only to pass evals. Once I pass them, I drop the scalping and I start trading my tried and tested strategies that are a little bit slower pace, let's say. You can see here I was in this for 2 or 3 days. And these play out. You can see here you'll probably get, I think it was 12 trades last month on this. The quietest period this year, I've had only 6 trades using this strategy on one of the months, and last month was 12. So yeah, you're not going to get setups every single day, but the beauty is you're on the hourly time frame. This actually works on the 4-hour time frame as well. If you're a busy 9 to 5 and you're working, I actually started this doing 4 hours, and then I noticed that it really produces the same, if not better, results on 1 hour as well. So you can use it in 1 hour and you can use it on the 4 hour. If you're working a busy 9 to 5, you only need to check 2 candles when you're working because they only print 2. So let's move on with this. So we're at Euro New Zealand. Yep, we already discussed this one. We've seen here and here, and then we entered, and you can see the entry as well. Look at the entry. There's absolutely zero drawdown. As I said earlier, you can see my stop loss is very tight here because I crunch the numbers. That's what I do in my time. I sit and crunch numbers and look at the drawdowns on each pairs and stuff. And just now, and if you're watching this video in a year's time, it may change, so don't take this as gospel, but just now, based off my data pool, I can have a tight stop loss on Euro New Zealand dollar. Euro New Zealand dollar. But when you're watching this video in a year's time, 6 months time, 3 years time, it may not be the case. That may be a bit wider, so just be aware. So let's go into our next trade. So here we have CAD JPY. So we'll just pull up our FOTSI, and this is what you should be looking at during the day. During the day when you're at work or whatever, this is the only thing you need to look at here. You don't even need to look at candlesticks. You can just look at the FOTSI and see if anything is setting up for you. And again, doesn't matter what currency pair you're on, just turn your phone or your iPad on, have a look, and you can see that, yep, we do have a setup. So here we can see CAD is up here above 50, and JPY is here sitting at minus 44. Okay, now here we would come to the charts, and again, if you've been trading and you have knowledge, on candlestick patterns and so forth, you could potentially drill down into the lower time frame and look for your entry. Look for this engulfing candle here. I know this is on the hourly time frame, but you see this engulfing candle. So if you were on the lower time frames, you would have probably got a more better of an entry if you have the time, and if you're not working a 9 to 5, or if you do have the knowledge, then use it and drill down, because this is telling you you're at a POI. That's what this is doing. You're at a POI, point of interest, or LOI, level of interest. That's what this is telling you here. So you can then go to the charts and drill down and use your experience. Are you at a psychological level? What are the actual candlesticks doing themselves on a lower time frame? Are you making, lower lows and lower highs? Is it an engulfing candle? What is the volume delta footprint saying? All that information really helps too. But you can see here, even if we'd have just entered here off the hour, boom, straight away, right down to the EMA. So we took that on the 50, and what was this? This was a 6.3. So you can see here as well, we're actually getting some great trades, some great risk to rewards. Now, the thing with me is my take profit is set in stone. EMA 50, EMA 100, okay? So the only way that I'm going to increase my risk to reward is by pulling down my stop loss, because this is never going to change. I can't change this EMA 50 and EMA 100. They are what they are. That's what my take profits are going to be. So the only way I can squeeze more out the markets is by having a tight stop loss, and that's why I do sit and crunch so many numbers and have a big data pool and find out, you know, what each pair, what I can get away with regards to a stop loss. And I've been burnt a few times doing it, but this is what you need to do to get the good risk to reward. You can see here a 6.5 to 1, whereas if I had that up here, let's say I had even a 30 point stop loss, it would have been a 3 to 1 just with a stop loss like this. So I also look, and I'm familiar with the kind of candles as well, and if you look closely, we'll just move this and we'll move this here. So if you look closely here at the candles, if I take my line tool, I can draw a line and slice it across these bodies, and I'll make it thicker. So you see this line here, okay? It's almost aligning the bodies, never mind the wicks, it's almost aligning the bodies of 1, 2, 3, 4 candles, okay? Just the bodies, they're all aligning, okay? Now if you want to take the wicks into consideration, you could also say from this wick to this body, you can see this is a downward trend. Remember, we're on the 1 hour time frame, okay? So if we were to drop lower, this is a downward trend, and this here, with all the bodies lining up, is almost a resistance zone. So if you can put your stop loss down here to above just that resistance zone, that's how you get fantastic risk to rewards. Look at that, there's a 20 to 1. So the stop loss is everything in this strategy, and only through time and experience you'll be able to get those big trades, because big 20 to 1 things, pulling your take profit down here, never happens. It only happens through having tight stop losses and knowing what you're doing. So let's look at one more before we end the video. So again, we're going to pull up this indicator here. So now we're looking for the US dollar CHF. So if we just zoom in here, so we've got the Swiss here, Swissy, and you can see here we've got the US dollar. So this is a very good trade because you can see here the US dollar actually starts to curve up. Can you see this? Yep, it starts to burn a downward trend and it comes into an upward trajectory, okay? And I catch it just before it moves back into that plus 25 zone. I actually catch it at minus 26. And when I do catch it, the Swissy is still in this, above this 50 zone, in this overbought zone. So we're saying that these two currencies are having to come back to equilibrium, okay? Because as we said at the start of the video, these are all the major currencies, the major economies of the world, and they need to do trade together, and they must rebalance. There's just no two ways, they must rebalance. So again, we've drew our vertical line at where we thought our entry would be, and if we come back to the charts here, we can see that our EMA 50 and our EMA 100, again, it's good to take note of how many times it hits your 50, how many times it hits your 100. So if we look here, we can see EMA 50, EMA 100, and for some reason I've went beyond, and again, just intuition, just a feeling, just, you know, I've seen this big wick rejecting. It could be, I don't know, if I'm being honest, I don't know what this was, but I've obviously seen something here to keep me in the trade longer than just getting out, because this should have been exited here, okay, but we actually kept it until here. And I think looking at the charts, I've lately been looking at this and I've seen this rejection, which has made me stay in just that little bit longer, and it's turned this trade into a 7.5 to 1, whereas if I'd have took it there, it would have been of 6 to 1. so we squeezed that little bit more, and again this is through experience. If you're in doubt on what to do with your stop loss, a good starting point for this strategy is whatever you're comfortable with monetary wise. So try and aim for at least a 1-to-1, and if you're risking $50, then you want to gain $50 just at a 1-to-1, just to get comfortable with it. Then you can widen your stop loss potentially to here, and your TP to here, and you don't need a lot of movement there, and this just to build your confidence with the strategy. And then when you do build a little bit of confidence but you still don't have a whole lot of trades to have the data, you can maybe pull your stop loss into previous structure to the left hand side. So we can see here in this particular example we have the candles, the wicks of the candles, we could use them. So the stop loss is based on the previous 2 hours. So wick and wick is covered here. So we could put our stop loss just here. And if we aim for even the 50 EMA, that's still almost a 4-to-1 trade. Almost a 4-to-1 trade. So that's it, guys. This is the FOTSI strategy that made Serghey Magala the Gold Cup Forex World Champion, and he's obviously the Futures World Champion as well, as I showed you at the beginning of this video. This strategy works. This strategy is tried and it's tested, and I've been doing it on my main account that I call my swing account. I've been doing it on there for probably, I would like to say, about 6 years now. About 6 years, and it is, I would class it as maybe one of my main 2 trading strategies. Certainly it's the only swing strategy that I have. I do a little bit of mean reversion, but I've got an intraday strategy, but I would not use this what I've showed you today to try and pass an eval. Yes, you'll pass it, but it will take you maybe months to pass it. There is quicker ways to pass an eval. I've actually done some videos. If you look at my previous videos, I think there's 2 videos on scalping using VWAP, and I think there's another one on using the break of the 15-minute candle. They present opportunities every single day, and you could literally pass your eval within 3 days. If you're on this and you're trying to pass an eval, you would definitely, I would like to say that it would take you for sure over a month, maybe even longer, because some of these trades you will miss because they will happen when you are asleep. If you're in the UK, for example, you'll get setups that happen in the Asia session, and you'll miss them, so you won't get every setup. So that's it for today's video. I will do another video very soon on the whole nuts and bolts and makeup of the currency strength index, and how it's the currency strength index that moves the markets, guys. Nothing else. Not order blocks, not support or resistance, not fair value gaps. Until the next time, please stay safe.